Welcome to Caching Waves. This is an Elliott wave update for XRP. Now I'm going to get into the micro time frames, talk about how the count has potentially changed and where I expect us to go from here. Now if you're new here, quick recap all the way out on the daily chart. I wanted to show you my primary, and that is that we have a multi-year contracting triangle, the top left triangle you see on this chart. How this pans out is 3-wave patterns for an ABCDE 5-wave pattern, making a series of lower highs and higher lows in a contracting manner. Once we reach our E-wave termination point, we get continuation of the trend, which is to the upside. Now on the chart, this looks like as so, as A, B, C, D, E-wave complete. You can see we got the reaction we were expecting in an impulsive manner off that E-wave low. Now to keep this labeling intact as current, we need to hold this E-wave low at 38.23 cents. But to be clear, the triangle doesn't invalidate till we actually break the C wave at 28.72. Excuse me. But for trading purposes, we're using the E wave as the invalidation of the current counts. So all the way down to the 1 hour. This is a 5-wave move off that E wave low. We had our wave 1, 2, 3 got extended. We take the length of wave 1 off of wave 2 in blue, looking for that third wave target at the 2.618 extension. Our original target was only the 1.618, but no surprise we got that extension because we were at an E wave low. After that, we got a triangle for our wave 4 and a 5-wave move for our 5th wave to the upside. Given we didn't hit the 1-to-1 extension of wave 1 off of wave 4 for the length of wave 5 target. No surprise though, because we did get quite extended here for our 3rd wave. After that, have a 3-wave move as an ABC, and this is where we ended up last time. So last time I suggested that we are making an impulse to the upside as such. I gave you the trade setup. Just trying to remember exactly what I did here. I suggested I was taking my trade at the break of this X wave, stop at the low of the Y. So I was waiting. It was right in this area I uploaded the video. I was waiting for the break of this X wave, and I triggered in the long and put my stop at this wave 2 low. We were targeting all the way up. It's like a 7-to-1 risk reward at that point, but I did suggest once we reach this 3rd wave that this could also be an ABC. Reason being, we hit the 1.382 extension if labeled differently. So what I suggested was take the Fibonacci pole of this wave 3 as labeled, and what I did was put my stop past this 50%. Reason being, the guidelines of wave 4s, you don't want to pass a 50%. So I put my stop right in this zone. I got stopped out right over here. So it wasn't obviously an impulse, but did make 1.45 units, 1.45% on the account. So not too bad. That's how you turn a loser, as in the wrong count, into a winner still, by being strict with your risk management. Now I suggested in the last video that if we don't make that impulse, we're more likely to make a WXY as a combination pattern and making a larger flat. This was my alternative count. Reason I suggested that was the time passed of this 5-wave move. We didn't even hit a 30% as a very quick retracement. We usually expect to hit between a 618 and a 1-to-1 in time extended off the beginning of this wave to the end of this wave. So although it didn't break any rules, I was very suspect that that's all the correction we were going to get. So because of that, I suggested the alternative that this could be a 3. We get a complex correction here in a series of 3s and then we get a 5-wave move down, and this all becomes an ABC as a flat correction. A, B, C. So targets for that wave is up between, as a running flat, up between the 1.236 and the 1.382. Targets are 72.76 to 77.38. Now it's important to note as well that the only minimum requirement we have to make a flat is the 90% of the A wave, which would be as such. Which we have technically hit already. So if we're making a flat pattern, excuse me, it can happen from anywhere in this area. Although a majority of the time we come between the 1.236 and the 382. So that would be my bias. Now we're going to make one more push down, make another matching leg here as a WXY. Series of zigzags most likely. But just to be clear, we have reached the minimum requirement, so we can technically make our matching leg from here. And this would be an ABC. So I'm going to be playing this a specific way. I'll show you that down on the micro time frames. Where is that? Right here. Okay. Oh, I lost my fib pole. Let's reverse engineer this. Okay. There's our B and X zone. So as an ABC, we're looking for this type of pattern up to that zone. And this area is obviously very difficult to count. I also mentioned we might double top here. Right now, the way I see it is as a flat ABC for a W, X, and we're having A, B, C for a zigzag. So this makes a WXY. As you can see, that lines up with between around the 50% retracement of this W wave. And what I did for measuring is took the extension of W as labeled, extended it off of X. That brings us to 52.94 cents. I also took this as an A wave, extended it off the peak of the B wave, looking for a C wave down in this Y, and that brings us to 52.82. So you can see how close that is, right around that 52, 53 cent mark, right at the 50. Nothing says we have to stop there and pivot, but that's our high confluence zone to get this move to the upside. Now, let's see where that gets us. If we are to hit that zone as a W, we'd be targeting a 1-to-1 extension. If we come right to that zone, you can see that's close to our BX zone. So we might come a little bit through that. Maybe we hit the 1.236. You can see in gray, these are my secondary targets past the 1-to-1. So perhaps we come slightly below that, maybe the 236 to get up to our B zone. But after that, that's when we're looking for our 3-wave move, and finally our C wave to the downside, which creates our larger flat, and then we can actually continue to the upside. If we get this move, it is very bullish. When you get very high B waves and running flats where we don't make a new low below the A, that's a very bullish scenario as a wave 2 on the larger 1-2 scenario. So that's what I'm looking for in this area. Now, what I want to see happen before I get involved is our Y wave down, and I will wait, because this will be an ABC, wait for the break of this B wave. Or if we don't get a nice impulse off this low, I want to see a nice impulse. If we don't get a nice impulse, I'd wait for the break of the X wave. It all depends on the pattern I get. So if you get a nice 5-wave move, nice pullback, I will buy the breakout above this B wave. This would be our ABC within the Y. And what that would look like is like this. Stop at the C wave, say we come down to that 1-to-1 target, and I'll be targeting between that 1.236 and 382. About a 3-to-1 risk reward. But depending on the pattern, I might be able to have a tighter stop, right? You'll use invalidations where whatever they are on that wave that ends up panning out. Now, what if we're complete already? Well, if we're complete already, this does not end up being a 5-wave move. And this would be a zigzag in itself. I'll give it a short zigzag, and this would be some sort of diagonal. So in that scenario, when does this B wave, when is this no longer a B wave? It is when we cross the path where this is no longer an A wave, right? So I'd wait for the break of this X wave, and stop would go, if this was labeled as a 1-2, at that wave 2 low, again, targeting up to that area. So that's my bullish scenario. If we just keep coming down, then this could turn into some sort of diagonal where this is a 3, 3, 5, and our flat was not expanded or running. It's just a regular flat as we've hit that 90%. But important to note, I'm waiting for structure breaks. I'm not just entering here blindly, because I know we can get bearish here. I want to see this Y wave or this take off and buy at this X wave, stop at this low as a 1-2, right? Use your rules as invalidation levels. There's nothing wrong with getting in and this pulls against you. But don't be shy to take the trades when they are valid. That's all I'm saying. That's how I do it. And when I'm unsure, I wait for breaks, wait for structure breaks, because there's a lot of noise in here. Ideally, I see this and I buy right in this zone, stop at this low, targeting up here. But if we don't get that, I have my plan B up here, stop at this low as a 1-2, right? So we'll see if we get that move up to between 72.76 and 77.38, in which case I'll take my profit, as this will complete our B wave, and I'll be looking for a 5-wave move to the downside as our C wave before switching along. So I hope you guys followed my advice and made your decision to put your stop at that 50. Where'd all those come from? Oh, I remember that video. Okay. Because keep in mind, this can also roll over and our B wave is in and the C wave is coming down. So that's why I think it's so important to use structure breaks as your entries in zones like this, where we're B and X zones, right? I mentioned to you in previous video how hard it is to trade in B's and X's if you don't get clean patterns. So that's what I'm looking for, guys. I'm still quite bullish on XRP. This does not look bearish currently. I don't see this as any way to be a 1-2 to the downside. So looking good for the bulls, just not quite yet, right? All right, guys, that's it for XRP. Thanks for watching. I'll see you on the next one.